The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building a world where mainstream finance happens on-chain. Their first product, Phoenix, is a fully on-chain limit order book DEX on Solana doing hundreds of millions of dollars in volume. I know this team personally. It's one of the strongest in the space. If you're interested in working with a team that's here to stay, Ellipsis Labs is hiring engineers passionate about DeFi to join their team. You can find Ellipsis Labs on Twitter at ellipsis_labs or head to ellipsislabs.xyz to learn more and apply. Today we have on Shehzan from Lava. Shehzan is a good friend, somebody who is building something that I think is potentially very important for Bitcoin and building something that really was not possible before now. Disclosure, I am an investor. I am a big fan. Yeah, we're happy to have you on. Shehzan, you want to introduce yourself?
Yeah, for sure. I'm Shehzan, founder of Lava. And TLDR on Lava, it's the first way to borrow against your Bitcoin natively. So that means you don't have to bridge it or give up custody of it. And you really, the way it works, we can go into a lot more. You're locking your Bitcoin on the layer one and borrowing a stablecoin that can actually exist on any network. And then you can do whatever you want with your stablecoin once you borrow it. And like my background, I grew up technical, got into Bitcoin primarily just because I find self-custody super interesting.
Okay, so I think one of the big questions that is reasonable is if you don't have to bridge your Bitcoin, if you can borrow against it natively now, why was this never built before?
I mean, there's been a lot of work to help make this happen. So the real unlock is before for a smart contract like what Lava is doing, you are locking your Bitcoin and you want to release it under like some price of Bitcoin, right? Like if there's like an oracle attesting to some price of Bitcoin. And Bitcoin doesn't have the same functionality as Ethereum to where Ethereum smart contracts can call like an oracle price feed that's being committed to on-chain. But the way Lava works is we actually use this concept called DLCs, Discreet Log Contracts, where you can actually build conditional smart contracts using oracles that are actually attesting off-chain to the price of Bitcoin. And Lava uses this to build a loan system, but it could be used for other applications as well.
Okay, cool. So can you walk us maybe just a high level over DLCs, just like how they work in practice, and then we can get into how they work for Lava.
For sure. At a high level, like what DLCs enable you to do is build Oracle-based smart contracts. So that unlocks like a whole set of potential for things that are already happening in Ethereum that are using oracles to release like funds under some predefined condition. DLCs are actually, in my opinion, a superior way to do a certain type of smart contracts because they're private. So there's not a lot of information being committed on chain. Actually, on chain, these contracts look very similar to either Lightning channel being opened or closed, or even the Taproot, just like a normal transaction. The oracles are also private to these DLCs, so they don't know anything about these contracts, which is pretty cool. And that's because the oracles are testing off chain, and that also removes a lot of issues you might get in Ethereum Oracle MEV, or a lot of fees because oracles constantly have to be attesting on chain every block to the price of Bitcoin or price of ETH. So there's scalable, they're private, and they're very secure because what DLCs really are at a high level, you create a bunch of pre-signed signatures, you encrypt them, and the other each party can verify the encryption, that they can decrypt it at the right time and that the material, the signatures are valid. And really what you're doing here is you're like predefining all the output conditions of the contract, right? And that provides a lot of security because it's basically formally verified. Whereas in Ethereum, there's like this like code that's pretty complex that you're deploying to this blockchain, and it's like a complicated state transition function. It's really hard to formally verify what's going on. So for a certain type of contracts, DLCs also offer superior security.
Yeah. Okay. So how would you compare this to, say, like a lending protocol, like, I don't know, Aave or Compound on Ethereum? Like, what do you view as the distinguishing characteristics, maybe?
For the Lava loans protocol, the main difference is right now, if you're using Aave to borrow against your Bitcoin, you can't. You have to wrap your Bitcoin. So you're using wrapped Bitcoin. With Lava, you can use native Bitcoin. And you get all these benefits like private from the blockchain, private oracles, scalable, lower rates, lower fees. But also like Aave is a lending pool model. So you might, like if you're going on Aave to borrow against your ETH, for example, there's actually a bunch of like we've talked about this a lot. Other
Yeah.
assets, it's really hard to reason about what type of risk that you're taking on. In Lava, also, each individual contract is very customizable and it's also not upgradable. So a lot of Ethereum smart contracts are upgradable by a multi-sig. So when you put your money there, you're effectively trusting a multi-sig, even if you were using ETH. Whereas in Lava, you don't have that risk. There's no upgrade authority. So I think like from a security perspective and even like a simplicity perspective, it's superior in all ways, especially if you're
Yeah.
trying to Bitcoin.
You've told me before that building peer-to-peer loans, which is what Lava does, like building out these peer-to-peer loans is much more difficult than a peer-to-pool model, for example. What makes you say that? And what, like, in doing this on Bitcoin, what are some of like the, I guess, hurdles that you've had to overcome?
Yeah. I mean, from an engineering perspective, it shifts a lot of burden to the engineers. It's way more difficult to build. But once you build it, it offers a lot of superior qualities to users, right? Like privacy, scalability, security, and customizability. But yeah, it's just like so much harder to build a system like this. There's a lot more parts that you have to do for DLCs to work. Like there was the initial proposal by Taj, then there was like we had to spec out the cryptography more. There was like a whole spec. There was a library uh, to interact with DLCs, like encrypting signatures, verifying all of that stuff, right? For Lava, then we build like an Oracle network. We have like an open source Oracle implementation, right? And then we built that anyone can use to run an Oracle. Costs basically nothing to set up for yourself. Then we built the application and then infrastructure for the clients to run. So a lot more moving parts than just writing a piece of code and putting it on Ethereum, right? But I think once we've done this and we have like this like works better, so you get a lot of benefits.
Okay, so somebody goes and deposits their Bitcoin. Let's say they deposit $100,000 worth of Bitcoin, and they want to borrow $50,000. Okay, they receive that amount in dollars. Where do they receive that? And yeah, I know the answer, but obviously, but talk to me a little bit about how you decided on like the back end stablecoin aspect of it.
Yeah, for sure. So the way Lava works, when you actually trustlessly initiate a loan, so there's no like Oracle trust to initiate a loan. And in the happy path, when you repay, it's also fully trustless. There's no like Oracle attestation. So in the happy path of the loan, there's actually no Oracle trust here. But you can actually borrow the stablecoin on any other network. So it's compatible with any network that supports like HTLC compliant server basically. But we actually initially chose Solana. That's where like the stablecoins live right now. Pretty much, it was my reasoning was okay. Stablecoins, where should they live? Probably like the cheapest, fastest like network. And I think today that's Solana. So it was a pretty like clear answer for us.
Yeah. So then if you take a loan and then you receive dollars, I know you guys have your own stablecoin implementation now, Lava USD, but also you can just immediately transfer this to a
bank
Solana address or bank account as well. So that's an interesting one, right? Like you can deposit this directly into a bank account and have like sort of a traditional, loan against your Bitcoin.
Yeah, most people probably take it to their bank account anyways, right?
And like the degens can use this too.
Yeah, the degens can use it too. So you can borrow your stablecoin in Solana. We actually have like a whole app where you can withdraw it to your bank account directly if you want. It's super seamless. But if you don't want to do that, you could just use it as a degen, doing whatever you want to do on Solana.
I say degen.
I don't know.
Yeah, maybe it's a bit critical. I consider myself a bit of a degen. So I think this is interesting from the angle of like large Bitcoin holders or just average Bitcoin holders wanting to take a loan, which has been a highly in demand product for a long time, right?
I started building this because I wanted to take a loan against my Bitcoin. Don't want to give up my privacy, right? I don't want to bridge my Bitcoin. And
wait, can you talk a little bit about the privacy aspect from the way that you view this, right? Like depositing Bitcoin and then withdrawing, right? Like what are the privacy benefits you see?
A lot of the ways that Bitcoin works is even if you don't aim to be for privacy, you just aim to be like fee efficient, you get privacy, right? So with DLCs, like at a high level, what we're doing is all the executions happening like off chain, like off the network. So you're not committing to all the information of the smart contract on network, right? And so you get privacy from the blockchain and you get privacy from the Oracle. And it also just creates a more like fee efficient system. Like if we implemented Taproot, we would get more fee efficiency, and that also brings even better privacy. So yeah, that's privacy is really good. But also like this is a smart contract system. There's no KYC. Yeah, I mean that's the reason I want to build this. I want to borrow against my Bitcoin. I don't want to bridge it because bridging. I mean, there's all clearly custodial risk there, right? But outside of that, it's like super expensive to bridge. You have to like put your Bitcoin on an exchange, pay exchange fees to wrap your Bitcoin. Um, it might even be considered a taxable event. Then you pay like more network fees to move it onto another smart contract. You take on extra smart contract risk, right? Then once you move back, you have to do all of those steps again to go put it on an exchange, get your Bitcoin, move it back to self custody. With Lava, when you've used it, you just put your Bitcoin on the app, you got your dollars, and then you could do whatever you want with it.
Yeah, I mean, like obviously this is me like shamelessly shilling my bags, but the reason that this captivated me is because this is something that people have wanted for so long, and a lot of people have thought it was not feasible, right? Like in reality, it really wasn't. There's been some sort of like multi-sig setups that require like not true non-custodial. But like this is something that so many people got burned by doing last cycle, right? With like BlockFi and Celsius and all of these like pseudo,
and people got burned using the bridges too. A lot of bridges got hacked in the last 2 years as well.
Yeah. So like how you compare like maybe what you're doing to something like what we are now seeing come out of this wrap Bitcoin and the entrance of a new exchange coming into this with Coinbase backed Bitcoin. Like how would you sell like Lava, for example, versus like CBBTC, which is now kind of like the talk of Twitter, I guess?
Yeah, I mean, I think bridges, they're just honeypots of Bitcoin ready to get hacked. So, and even if you're not worried about custodial risk using a bridge, you're going to have to deal with all the other issues, right? It's like super expensive to bridge there and bridge back and taxable event and all that type of stuff. So yeah, I think like if you can borrow against your Bitcoin natively, keeping it on the layer one, you don't have to bridge it. You don't have to give it to a custodian. You get lower rates. It's cheaper. It's faster. It's more secure. It's more private. It's like a no-brainer that you'd want to use Lava to borrow against your Bitcoin rather than bridging it to Coinbase or using even like wrap Bitcoin, which I know everyone's trying to exit their bridged Bitcoin positions right now.
Yeah,
so it's like it's actually really perfect timing for us to launch. It's pretty cool.
Yeah. How do you view? And this is now just like getting into more kind of, I guess, your personal philosophy, but how do you view? I guess I'll say target customer, but more what I'm getting at here is like in DeFi and a lot of the rest of crypto, a lot of people are more than willing to deposit into Aave and take a loan against that, for example, right? But this becomes a little bit more precarious when you're telling a Bitcoiner who's maybe like very conservative and says not your keys, not your coins all the time on Twitter, and is like very vocal about smart contract risk and bridge risk and just hold your own keys. Like, how do you sell this to somebody like that? Like, do you view this as a solution to the average Bitcoin holder, or is this somebody in your mind who is like already willing to take a certain level of risk in like maybe borrowing against or like using their Bitcoin elsewhere?
I mean, there's a lot of average Bitcoiners signed up for Lava because we address a lot of their concerns, right? Like custodial risk, smart contract risk, like basically the risk of getting rugged. And then because we address that, they're super interested because I think a lot of people are very protective of their Bitcoin, and a lot of people don't want to give it up, and a lot of people have been dying to be able to borrow against their Bitcoin. I mean, I know a lot of very sophisticated Bitcoiners, OG Bitcoiners that use BlockFi and got rugged.
Yeah.
So now I think a lot of people, after all of those bridge hacks, after all of these like custodial, like custodians rugging them, are very, very careful of the Bitcoin that they still have and want to make sure that they're holding it in self custody and that when they're using it for payments or borrowing against it, that it's self custodial in nature. So I think there's a use case for the degen to use it. I don't know if the trader really cares that much about custodial risk, but I think they'd still want to use Lava because it's gonna be cheaper and faster, right? But I'm really interested in serving the Bitcoin, like OG Bitcoiner. I mean, that's why I started building it for myself, right? So I just want to borrow against my Bitcoin monthly to use for my expenses.
Yeah, but okay, I want to ask, like, so in terms of the loans, these are fixed rate loans, right?
Yeah.
So, how do you think these rates ultimately compare? Because as you know, with a lot of these lending protocols elsewhere, the pool models, like most people take on variable rates when they're borrowing dollars, right?
Mhm.
And so I'm interested to hear, like, if you think that this will be much more competitive. I mean, in if you get a real like equilibrium here, I think with um non-custodial, like true smart contract, these rates should be much lower, right? Than
Yeah.
something like,
Yeah.
because I guess the reason I say this is because a lot of people who have used wrap BTC, like these are variable rates, but they tend to be decent on the grounds that there's a lot of liquidity there. Whereas
Yeah.
if you were more of like if you were or are more of like a OG Bitcoiner, not wanting to use like some of these DeFi protocols, you may have gone to like Unchained or what was the other one that did loans? Yeah, I know Unchained did loans for a while, and their rates were like fairly high, right? Like
Yeah. I think a lot of OG
15.
Bitcoin wrap their Bitcoin out actually, but
Yeah,
too. But
that's true.
yeah, but yeah, I think the rates. If I think of it as a lender, we work with a lot of lenders. If you're just wanting to earn like a risk adjusted rate, right, and you consider there's two things you want to consider in the rate that you're pricing for a loan. It's like the cost and then the risk, right? And so the cost to service a loan in Lava basically zero, right? It's all automated. It's done through this like
Right.
smart contract system. There's no cost to service a loan, and the risks are really like as low as you can get on like a dollar yield, other than just giving your money to the U.S. government, right, for like short-term treasuries, because you're lending one against the most liquid digital asset, native
Yeah.
Bitcoin.
Yeah.
Two, you're lending on this like formally verified system, so
Right.
technical risk is very minimized. And then yeah, you're getting to set like your rate for your different like terms, duration, LTV ratios. So really the main risk you're taking is like liquidity risk, and you can price that. So I think the rates should be like much lower, just because the costs and the risks are much lower.
Yeah, I think this is interesting to me as well, because this is kind of the first time that we, at least like the way that you Lava's designed, and then obviously, competitors in the future, but for the time being, like this could be the first time that we see a true like market rate for liquid Bitcoin loans, because all of the rest of these loans have taken on a lot of custodial risk, and they have to
Yeah.
price that in, and they've taken on loan origination risk,
Yeah.
or price rather. So like I think this is quite interesting. It's very much dependent obviously on like the amount of liquidity that Lava is able to generate, like sort of on both sides of this.
Yeah.
Like who are your lenders, or like who do you view ultimately as being lenders? Also, are lenders permissioned right now? I think like the answer is yes, but like in the future.
And basically, the lenders in the system are people who are mostly already participating in oversecured loans right now, either using wrap Bitcoin or like custodial Bitcoin. And they're really interested in working with us because it reduces risks and costs for them.
Okay. Well, I want to go back for a second to oracles.
So yeah.
Yeah, like explain like the Oracle setup, and then also a lot of people know Chainlink, right? Like this is sort of the
Mm-hmm.
most used Oracle on Ethereum, and in many ways like prices
Mm-hmm.
almost all of these assets, right?
Yeah.
How does how does this Oracle implementation differ, and maybe get a little bit into just like how this differs because of Bitcoin versus
Yeah.
something like Ethereum or Solana?
Yeah. Well, the nice thing about DLCs is oracles are. I think it makes oracles a lot. It solves a lot of the problems that you see with oracles and other ecosystems like Ethereum, right? One, oracles don't have to test on chain, so that reduces a lot of fees. It also gets rid of this idea of like Oracle MEV, which I don't. I think your listeners are probably familiar with that. Don't need to get into
Yeah.
it. Two, it makes oracles private. Like they don't know about the contracts that are using their price feeds, which is like a new paradigm, which I think creates better incentives and reduces like the risk of oracles being malicious. And three, if you're going and using Aave, you can't choose your oracles, right?
Right.
You're beholden to like the Aave bank basically and what they chose.
Right.
Here you can choose your own set of oracles, which I think is super cool as well.
Yeah, but okay, so can you just be a little bit more explicit for those of us who may not like know so well how this would function. Like when you say you can choose your own oracles, like who exactly are you choosing in practice? Like, are we talking about a Coinbase API, like a Coinbase price feed, Binance price feed? Like, is this the general idea?
Yeah. We have this open source Oracle implementation called Stiples. Anyone can check it out. You can check what price feeds are being used, and then these oracles are when you run an oracle, you're taking these price feeds and you're converting it into a cryptographic attestation, right? That you can use to form like contracts based on. And like for example, like or you could run an oracle and have an oracle that's like public that you could use. But mostly, I think that the future will just be like the exchanges running oracles, and
Yeah.
people are just using price feeds from them. That's what we have right now. So
Yeah.
that's what I see happening in the future. But the nice thing is like you can choose your own oracles if you want. Maybe you don't trust like Coinbase or something, then you want to choose like get an oracle set that is everything but Coinbase, for example.
Yeah. Okay. And now I keep jumping around, but I want to go back to a question I have about loans for a second. Like in terms of rates, what is like, how is this structured in a fixed loan design? Like, so are you, when you deposit and you borrow against this, like the more you deposit, the lower your rate should be. Is this like true in practice or not necessarily?
Yeah, I mean, I don't want to speculate on how the rate dynamics will work because that's probably just going
Right.
to be set by like lenders, right?
The
And
market, how it should be. Yeah.
yeah, the market will set it. So I'm like I give it some thought, but I might just be wrong because I'm not like a trader or
Yeah.
like a market maker, for example. But yeah, I think that the way I think about it is maybe if you have like a higher LTV on your loan,
Yeah.
then you should probably pay a higher rate. I think because it's
Yeah.
probably like marginally higher.
That's
Because
intuitively correct. But this is also like very much dependent on liquidity, you know?
yeah, liquidity. But I think that yeah, I think it makes sense. Like it should be marginally higher, but honestly, I think the liquidity risk of Bitcoin for lenders is like super low anyways. So
Yeah.
I think it'd be like marginally higher. I think like different loan durations should probably have different rates that they're
Yeah.
paying. I don't know like how people would want to consider that, but probably some like sophisticated lender could come in and price those rates.
What are the like default loan durations on the like
Anything works, yeah. You can take
what is
anything
your
from like a day long loan to
yeah.
years, yeah.
Do you have any intuition on like what the average loan duration will be? Like a
I mean, I'm going
year?
to use it for monthly loans, right? Because I get paid monthly. So I would personally use it for like a monthly loan against my Bitcoin. So then I could just like take those dollars and then like spend them, right? And then just keep making like monthly loans over a long enough time period. And in that way, I'm basically arbitraging the difference
Yeah.
between Bitcoin price appreciation and the rate on my loan. So that's the way I would use it. But I could imagine like someone else using it for like let's say like you're like super exposed to Bitcoin and then you were in Nashville for like, like Trump's speech and you just thought Bitcoin was gonna go like bullish and you didn't want to pay any expenses, you could have taken like a week long loan, right? Against your Bitcoin because maybe you're like going out in Nashville and partying and taking a lot of expenses. So like I think there's like different people that might use it differently.
Yeah. My like personal intuition is this is slightly more catered towards somebody who wants to borrow against Bitcoin and use it outside of a circular system. And I'm not saying this too critically, but I'm saying this like in the context of DeFi, most loans are used to go do more DeFi, right? But I think maybe this is more of like a average person, if you will, even though taking loans against a fairly volatile asset to begin with is like
It's not like an
maybe
average. Yeah.
yeah, and that's like I kind of touched on this before, but I guess maybe I'll ask a little bit more directly. Like, I don't know that I can go like for certain. I'm not going to go to my mom and say like, "Oh, you've been
Yeah.
DCAing into Bitcoin," and I'm not going to tell her to like wrap it, put it on Aave, borrow against it to pay her monthly expenses. Like, I'm just not going to do that, right? But I'm curious. I think this implementation is more geared towards somebody that may want to use this and like. I mean, this has been in demand for so long, but I'm always like conscientious of the fact that we live in sort of this echo chamber, like of this bubble of like highly financialized people who assume we like, oh, we can take this risk on, but I'm not going to tell somebody else necessarily. So I'm curious how you think about that.
Yeah, I don't want to ever convince someone to borrow against their Bitcoin. I don't really even want to convince someone to buy Bitcoin. They should make their own decision, right? This is for like a Bitcoiner who's like has significant Bitcoin exposure. So
yeah,
if you're like a Bitcoiner like myself who has significant Bitcoin exposure, because you have significant Bitcoin exposure, you probably don't want to sell your Bitcoin, right? And then there's like, yeah, I mean, I feel like there's been like a lot of talk about borrowing into Bitcoin, like it's like a way to short fiat, which is kind of interesting, right? I mean, like a lot of people have done that during like high inflationary times, right? So it's like a lot of people who would do it, but it would always have to be someone who's a Bitcoiner and who has significant exposure to Bitcoin. And I do think that people would use it to trade. Like actually, we have like a lot of traders signed up that are interested in borrowing against their Bitcoin and then making some trade on Solana. I mean, I think something that people do on Solana a lot is like yield farming. So you could like borrow against your Bitcoin and yield farm on Solana.
Thanks for listening to The Gwart Show on the Blockspace Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
Yeah. Could this be implemented with Base in the background? Or I say in the background, I'm using that in the context of like maybe a Bitcoiner who's not so, knowledgeable about DeFi or like some like using other chains, for example. Could this be like, could you put Base or Arbitrum or Optimism and let people use USDC? Like, could this be implemented in the same way?
Yeah, it would be like not that trivial for us to do. But like I said, like the reason we chose Solana in the beginning was I was looking at the ecosystem. I was like, okay, well, Ethereum, it's like changing all the time, right? Like the narrative changes like every month about what Ethereum is going to be. It's not like a reliable network to build a business on top of, right? Like to integrate with. Whereas Solana, it's like it's gonna have low fees and it's gonna be fast because they said that that's what they're gonna do, and they've been able to like meet that so far. So Solana just makes like a good step. Good, and we abstract it all away. Like you use the app, right? Like you never have to build Solana token. We actually have like a global exchange aggregator built within our self custody app. So once you can buy Bitcoin through it too for lower rates than you're going to get at most custodial exchanges. But you buy directly to Ava, you borrow against it, and then you take those dollars, and then you can just like withdraw it to your bank account. And if you're a Bitcoiner who's withdrawing it to your bank account, why do you care if you borrowed it initially on Solana, right?
Right.
Yeah.
But so for example, once again, for Bitcoiners maybe who are like somewhat, risk averse and have seen a lot of the trials and tribulations of these other chains, are they at risk if Solana goes down? Solana has gone down. It hasn't gone down in a while, but are they at risk if Solana goes down if they've borrowed dollars?
The issuer is all that matters, right? Like Solana doesn't really matter. Like the issuer is what matters. The issuer controls like if Solana goes down, the issuer can just fork Solana and just like run it again, right? It's just a node. It's just like a server implementation, basically.
This is kind of like one of Anatoly's points on USDC, right?
Yeah, it's like a distributed server implementation. Like as a Bitcoiner, like you shouldn't care. You're just borrowing your stablecoin. And like if you use stablecoins directly, which I do, I think it's pretty cool. Like you can send it to someone, they don't have to KYC, right? Whereas if you use something like PayPal, you're always like KYCing. Like you can only send it to people within the confined PayPal ecosystem. Whereas you don't have to, I mean, that's just getting into like the stablecoin case, right? But they're pretty cool. You can send them around. But if you don't want to do that, like if you're in America, you probably aren't. You're probably just like spending with like a card usually, so you can just withdraw it to your bank account. That's what I do, and then just pay with my card.
Yeah. Okay, I want to move on a little bit. What are some of the other applications of DLCs, discrete log contracts? Like where else can these be useful in like building out various primitives? I know you've worked with other teams. That's why I kind of...
Yeah, like, I mean, we have an Oracle. We're using it for loans. Anyone can tap into the loans protocol if they want. Just hit me up. We're already working with a bunch of like institutions, which is pretty interesting. But yeah, outside of loans, I personally only want to borrow against my Bitcoins. I don't find a lot of the other use cases like that interesting. But the one that's probably the most prominent one is like a derivative, right?
Yeah.
Like Bitcoin, you lock your Bitcoin and you can do like derivatives because you only need like the price of Bitcoin to do like some derivative contracts. So one thing people are interested in doing, and I don't know how much people use this right now, is just like getting a dollar derivative, like long, short. That's like probably the other main use case of it. I've just found personally, like people who just want like digital dollars, just want like one-to-one backed digital
Yeah.
dollars, right? They're just capital efficient, especially if you can use something like Lava, where you can just like get them easily to self-custody and then withdraw them back to your bank account. Yeah, like that's what I found people just want to use. And then I think that people who don't want something like that, who want something more nation state resistant, want Bitcoin.
Yeah.
And
I
I think
think you
that's
have.
like the two assets that I care about in the context of this like self-custody industry. Yeah.
What has been your experience? I don't know exactly. You can take this question wherever you want, but what has been your experience building in Bitcoin? Like, do you feel that Bitcoin, you and I have talked about this before. There's kind of this narrative that Bitcoin lost its hacker culture, if you will, or I don't, and I'm interested because I think you have a slightly different view. And like, so I'm kind of curious, like, what has been your experience and like, what do you think of like the development in Bitcoin right now?
I think it's really great. I personally feel that the Bitcoin developer culture in the context of crypto is by far the best. I think it has definitely not lost its hacker culture. I think the Bitcoin developers are, in my opinion, the best developers, like actually like more cracked engineers. And yeah, even in the context of tech largely. And I don't think we might have like not enough funding, right, for Bitcoin development. There's like a lot more like VCs and other ecosystems, for examples, but that's also changing right now. I think there's more investors, and there's also a lot of like rich people that are like giving their money, right? Like Chain Code is funded, for example, by like the HRT founders, and Chain Code does like really really good work on Bitcoin Core.
Yeah,
and I don't think it's processed like hacker culture at all. Like by far from it.
Yeah, I think that that has generally come about as a result of a lot of development, right? Like I think you probably have some personal views as to the, quality or usefulness of the development, but there's been a lot of development elsewhere, right? And I think that a lot of the Bitcoin development has generally been just like not very sexy. You know what I mean? It's
okay, it works. Like you can use Bitcoin, right? Like you can get it. It's liquid. The Bitcoin core works. It's very reliable. Now you can use Lava. You borrow against it. People are developing Bitcoin payments layers, right? There's like Lightning that's had good work on.
What do you think of Lightning? Can you just, because I know you worked a little bit on Lightning. Can you just give us your
I started this by building. Yeah, actually, when I first started building Lava, I was like, man, I just wanted to just build the Bitcoin payment stuff first, right? Because we have like within Lava, our self-custody app, we have free digital dollar payments. We have loans now. We'll have swaps soon, right? You already have on-ramp and off-ramp. And right now for Bitcoin self-custody, you can just do on-chain payments. I wanted to start actually all of this with doing Lightning payments with Bitcoin, right? I think it's okay that we haven't figured out instant zero fee Bitcoin payments yet because there's not too much demand for that.
Yeah.
And Lightning is a protocol that is still very much in research and development.
Yeah.
Yeah. So
I think also I don't know my journey, because I think I have felt this for some time, but this has become more clear to me. I think people want to just hold Bitcoin for the time being, right? Like if you believe in the long run of Bitcoin, if you believe that fiat trends to zero versus Bitcoin, like we're really going on our like laser eyes diatribe right now. But if you believe this, then the rational thing to do is to hold Bitcoin and spend in dollars, right? And so I think that Lightning is, I think Lightning doesn't get enough credit. I also understand a lot of the criticism of it, but the reality is like maybe whether or not it like works really well and kind of having to make an on-chain payment like an on-chain transaction or to open a channel and like some of these kind of issues that we know exist with Lightning. Like one of the bigger problems is that people just don't really care to spend their Bitcoin with Lightning. Right? Yeah, no, it's fine. I just think it's interesting, right? Like that's the bigger problem here. It's like people paying each other. Right.
I mean, I don't want to spend my Bitcoin. Like the way I view it for myself is like almost like gold, like I'm protective of it. I don't want to give it up. I would feel really, really bad. I feel really bad that anytime I have to sell my Bitcoin, right? I feel like horrible about it. I want to just like borrow against my Bitcoin, spend my dollars. I don't really care spending my dollars. They're money. It's cool, but like my Bitcoin's like the money I care about. And I think that's fine. Like there is going to be one day, in my opinion, where the dollar doesn't exist, right? I don't know if that's like within the next 3 years. I'd hope not,
No.
because I don't think we're ready for Bitcoin payments yet. So it would be super chaotic, but maybe it's like 10 years away where
or
like
more, right?
maybe more. I don't know, but like, yeah, maybe like a little longer than 3 years. And I think that we're going to figure out like self-custodial Bitcoin payments.
Do you think we over-indexed on the medium of exchange narrative too early versus the store of value?
I don't know. When I like first got into Bitcoin, I felt like the narrative was store of value. But in the last like 3 years or maybe 4 years, it kind of like shifted to be like medium of exchange. Do you agree with that? I felt that.
I mean, I think Lightning is obviously an attempt at medium of exchange. I think that Lightning also, people are calling Lightning now sort of like the connective tissue between various layers, right? And if you can look at this from some of these roll-ups or exchange to exchange or eCash to roll up to exchange or Fedimint, whatever it may be, people are viewing Lightning now as like this interoperable. I hate using that word. I'm not going to use that word. This connective tissue between these layers, right?
Yeah.
But it was also proposed as sort of the end user also, and I think that is becoming less of the narrative as we see Lightning develop into more of like an LSP, like that Lightning service provider hub and spoke model versus like this routing of individuals. So I think that's a reasonable take. Like I've become more and more of the opinion that like the store of value narrative now is like the digital gold narrative is fine. And we shouldn't be pushing people to spend Bitcoin on Lightning with all this cumbersome and sort of like, base software.
Well, I think a lot of Bitcoiners also thought that we just had so much inflation that the dollar would go away by like 2025. And that's seeming like I don't know if things are going to move that fast. I find Bitcoin super compelling right now for the savings use case. Like that's why I got interested in Bitcoin. Was like it's just like an easier way to save, and a lot of people spend so much of their time. And I think it's like a problem I have with crypto, just like trading, and just creates like a more hyper financialized world. I think Bitcoin just can help build a more savings based economy, sound money, basically all of sound money type stuff. I find super interesting, and I think it's still true today with Bitcoin as a savings tool. So I think all this focus on spending your Bitcoin is like off brand to me. But I think like one day people would want to spend their Bitcoin, and when that happens, like I don't know, like I think we'll be able to figure out a way that people are able to spend it actually having like self custody of their Bitcoin instead of having to give it to a custodian and then they keep Lightning in the interim. But and I think it's still important to keep working on that, because what if the dollar goes away tomorrow? So just still work on that.
Yeah. What do you think? Like to that end, I mean, what do you think of a lot of Bitcoin ending up with Coinbase or wrapped on with CBBTC? Like, what are your thoughts on that?
Yeah, my main focus is I think that if you use Bitcoin, you should hold it in self custody. I mean, that's the whole point of Bitcoin.
I agree.
Like, if you don't want to hold Bitcoin in self custody, you probably shouldn't even hold Bitcoin, because the whole point of Bitcoin is that it reduces like it's money against like counterparty risk, right? Like, otherwise, if you have a lot of trust in institutions, you should probably just use the dollar, right?
Yeah,
so,
I agree.
That's my main focus, and why I started building Lava is I just want more people to be able to use Bitcoin in self custody. Like everything we've done, like borrowing against your Bitcoin in self custody, buying directly to Lava so that you don't have to custody it in exchange, but you can still interface with these really great exchanges, right? Being able to withdraw directly from self custody to your bank account, and all sorts of other products that we build in the future, swaps, etc. And more about the roadmap that isn't shared. We'll be to help people put more of their money in self custody, hold their own keys, and not use custodians and wrap Bitcoin. I think people just forget that wrap Bitcoin is custodial.
Yeah,
Bitcoin.
I agree. And I also, maybe some of my reservations personally come from, I think, for example, this new Coinbase Bitcoin, I think it is smart. I think it will do well. And I think that Coinbase is probably a pretty good custodian. So those are the nice things I'm going to say. With that said, I view the target market for Coinbase Bitcoin as people who are willing to take on risk to use their Bitcoin, right? And so when I see this, my thought is Coinbase can easily get people to self-custody real Bitcoin, right? But what they're doing is having people wrap it with their custodial service and move it, interoperable or whatever. And so this is fine. Like, don't get me wrong. I'm not trying to, this is a market of, let 1,000 ideas flourish or whatever. But to be clear, I think what a lot of the reservations, or maybe not reservations, what a lot of people would say was, well, there's no way to use your Bitcoin, right? Like, there was never a way to use your Bitcoin. And like, I don't want to shill too hard, but now I'm looking at what you're building. I'm saying like, yes, there is. There's a way to do this non-custodially. And in terms of like the risk profile, right? It's probably safer than anything that you're going to be able to use CBBTC with.
Oh,
right?
yeah, for sure. It's way safer. I mean, Coinbase, if they wanted to, could take this as an opportunity to get people to self-custody their Bitcoin.
Exactly.
And they could
integrate. They don't have an incentive, though.
They could integrate. I mean, if they wanted to. I mean, I don't really talk to too many people at Coinbase, but if they wanted to, they could integrate Lava. And most of their CBBTC users are probably just going to borrow against it, right? So if they wanted to, they could just instead just get all their users using Bitcoin, integrate it. But I don't really know that many people at Coinbase, though. So actually, Michael joined there. So
I saw that.
Yeah, that's pretty funny. But yeah, I think definitely just use native Bitcoin. It just makes a ton more sense. You can do already now with Lava anything you'd want to do with Bitcoin natively.
Yeah. We're gonna do like another episode with hopefully a very special guest, because a lot of our conversations, you've had a pretty big influence on my thoughts about some scaling and layers, and a lot of like some of the projects that we're seeing now. But how do you, like, I guess maybe just a layup, and then we can talk more about this when we have this other interview. But like, how do you view the scaling right now with Bitcoin? And I mean, I know we're friends with Udi, we're friends with Eric, like some of what they're trying to do. Like, how do you view, for example, the target market of people using something like Lava on chain, like on the L1, versus some of these layer 2s that are coming up?
I mean, in a way, Lava is a layer 2 if you think about it. The DLC protocol is a layer 2 to Bitcoin, right? And it's very scalable. Like at the end of the day, the way Lava's loans work is you put your Bitcoin, you lock it up, and then you can even cycle the loan over and over again without an on-chain transaction. So you could honestly like have like an infinite, like a bunch of loans, and then withdraw it back to your bank account. Right? It's like it's as scalable as you can theoretically get. And we're going to work on that, like on the engineering perspective. Like that's really our focus, because you've seen it works right now, right? Our focus is just reducing fees pretty much over the next like however many years we keep working on, like for basically indefinitely. There's a lot of things that we can do. Yeah, I think that like a lot of these other layers, when you put your Bitcoin on there, it's basically just rich Bitcoin, right? Or they have like massive liquidity assumptions, but they might be used more for trading. And I don't think too much about like the trading use case. I think it's just going to be hard it'll be interesting to see, but trading is definitely like right now people are just trading memes. So it's like a go-to-market game of, can you get people to trade memes on your network?
There's a lot of talk. So we see a lot of these kind of L2s popping up right now. And then we also, I say L2s, this is a bit of a generous assumption, right? But like some projects looking to scale Bitcoin in some capacity. I don't know if it's scaling, but they're calling themselves layer 2s in many ways. How do you view some of the opcodes or changes to Bitcoin that maybe some of these layers, these projects are sort of working off of or hoping to get into Bitcoin Core? I don't know how eloquent that question was, but are there any opcodes that you find compelling, and what is your general view on like changing of the layer 1?
Yeah, I think we should be careful to change layer 1. I think Bitcoin is, in my opinion, one of the most important projects in the world right now. So I want to make sure that it stays decentralized and people are able to keep self-custodying their Bitcoin and moving it around in a censorship resistant way. And I think the upside of these opcodes is that they help self-custody, right? So I mean, I don't know if I haven't thought of too many ways that they could help the loan system yet, but like one use case on helping self custody is like reactive security, right? Like wallets you can go
Vaults,
into.
yeah.
Yeah, that's like useful. But then like there's always this like there's like other concerns people have, and also I don't know if it's completely clear yet which opcodes are the best ones. Like even if we're okay with like adding like covenants, and there's so many different styles of them, right? And there's like a new proposal like every week
Yeah.
about covenants. I think it's going to take us a little bit of time to really like analyze all these proposals, come to consensus on which one's the best one, if anyone should be the best one, and then we need to also like write the code for it, right? And then like review the code, and then like set a plan to activate it. So this seems like it's going to take a bit of time. And I do see more momentum towards it right now, but I think it's going to take a bit of time. There's also like another proposal. I don't know how much people care about this stuff. It's like so nitty gritty. To go through like it's called like the Great Consensus Cleanup. That also seems to have even like more momentum. Like it seems more likely to happen before Covenant, I think.
Well, also this is like a very, I think, well agreed upon few changes, right? It's not, like it's like cleaning up some bugs essentially, right? Like the what's the bug that's where it's like one off the integer, like it's like the 20 to 38 problem or something like this, but it's different for Bitcoin. Yeah.
Mm-hmm. Yeah, there's a few, but no one, I don't know if there's like an open pull request, like code implementation fixing these bugs yet. So
has Matt Corallo not actually, I think he's the one kind of championing this, right? Does he not actually have like a spec? You talk to him more than I do.
yeah. I don't think there's like this other guy who's kind of working on it, but he's moving, like he's taking his time with it.
Yeah.
Like it's like probably has other stuff to do.
Yeah. What do you think about like the number of people with eyes on this? This is something that you've said to me before that I've always found very interesting, right? Mm-hmm. And it's like people, we have this like over $1 trillion asset, and there's just not actually that many core developers who are like working on this full time, right? And like in a sense, like with all of these layer 2s now, there's more layer 2 and application developers now.
Though, right? Like,
well, I know.
Yeah, but like those developers don't really matter as much. Yeah, I would say the people that are working on the core stuff are pretty smart. Yeah, but I think it'd be useful to have a few more of them.
Yeah.
I think it's just got to be careful about this stuff, right? So it'd be useful to have a few more of them. I don't like the Ethereum move fast, break things approach. There was like a tweet, I think it was like from Vitalik, right? Where he was like, "Oh, it's okay if we like break things. We'll just scramble." Do you remember that?
Yeah. I think
Bitcoin's like a much more important asset, so we should just be very careful about how we change it. Like changes the implementation of the Bitcoin protocol.
Yeah. I tend to agree with this. I saw a tweet you had yesterday, which to the essence of it was that we should keep stable coins off of Bitcoin and use stable coins on other layers. I have come around to this belief as well. And I have also come around to realizing that Solana and Base and these other chains, right? When you're taking on custodial risk, like you said, you might as well just use one of these other chains, right? Because what people want are centralized stable coins. So I know you have like pretty strong views on this too. And it's also shaped the way you built Lava in many ways, right?
Yeah, for sure. The way I think about it is what people clearly want one-to-one back digital dollars. That's true. We've seen that. It's not like an argument around that anymore. And I think even Bitcoiners, the hardcore maxis are okay with digital dollars because they see their use case and they're not competitive with Bitcoin. Bitcoin's nation state resistant money, and stable coins are more like a fintech innovation, right? And so I guess now it's like, what network? People want one-to-one back digital dollars. There's a lot of different ones. Which network do these digital dollars live on? So I think it lives on the one that's fastest and cheapest. And then there's this like whole argument, oh, maybe it should be on Bitcoin. It's just, I'm like unconvinced that stablecoins on Bitcoin will be cheaper and faster. It's just the Bitcoin network.
There's literally no way.
Yeah, I don't think there's any way. Maybe if for some reason that I'm can't even think about right now. Bitcoin stable coins on Bitcoin are cheaper and faster, but I just don't think that's true. I also think that's what my tweet was about was I think it's really okay if Bitcoin is just used only for the Bitcoin asset, right? Because having all these other issued assets on your network definitely increases centralization. I don't think anyone would say that that helps with decentralization.
No, it does not.
And an issued asset in particular the issuer has a lot of influence over fork choice, clearly.
Yeah.
So we really don't want that on Bitcoin. And I think it already works well that like a digital dollar is better served on something like Solana. I think it's just like an investment in the wrong direction to try to bring these digital dollars to Bitcoin.
Yeah. I think our friend CNode would. I saw his response, which was that they don't have fork choice. They have, what did he say? Like redemption choice or something. And this has always been kind of like a spurious argument to me, right? If they can redeem for $1 on one chain and then on the other chain it's $0, and all of the DeFi contracts and all of the liquidity pools are predicated on these stablecoins having a value of $1, I mean, it's
they really have fork choice. They have so much influence over fork choice.
Yeah.
So yeah, I don't know like what argument there could really be against that. And like I said, I'm not against issued assets. I think they're useful. They're just I don't think they need to be on Bitcoin. I don't think they'd even be that useful. Even if they were on Bitcoin, I don't think they would like win. I don't think people would use them there.
I think that issued assets will ultimately end up, and well, you said this, and I wholeheartedly agree. All issued assets will ultimately end up on the cheapest, fastest chain.
Yeah,
and
whoever wins that gets those assets. Like Bitcoin doesn't need to compete on that. It's totally different. Like vision. Yeah.
And I've like you and I have talked a bit about this as well, and I've come around to the idea of trading potentially equities on chain. I've come around to the idea that being able to issue an equity in a tokenized form for like a small business could be a compelling use case in the future. But the reality is that these will always be issued, right? You're always reliant on the person who issues them doing what they say they're going to do. And like a lot of these ideas of decentralized autonomous organizations, like, you know, like this stuff just doesn't really compute, right? It's like at the end of the day, if there's human influence in what these assets do, then who cares? Put them on the cheapest, fastest chain, right? Like this is how I view it as well. And I think this is a version of like technology. Like technology, like you said, it's tech.
People just like get confused because they can self-custody their Bitcoin and their digital dollars on the same app. So then they start like conflating them too. But they should just not worry about that as much. And yeah, you might see other tokenized assets. I really don't care that much about that personally.
Yeah.
Like who cares? Like just save in Bitcoin. Like it's like a better. I don't really even want to hold other equities because why would I put my money in that instead of Bitcoin, right? So I personally don't really care if we see other tokenized assets. I'd rather just save in Bitcoin, spend in dollars.
Yeah. Have you had much? Like I know at least some, but like, have you had interaction with the Solana community? Like, what is your view on what they're trying to do?
I think they want to build the cheapest, fastest network. So I think they're like, Ethereum seems very ideological when they're trying to like compete against like Bitcoin to be better money, which they're clearly not like winning that race, right? I think the market's proven that Bitcoin's better sound money or savings, and they're also trying to compete against Solana to be like the cheapest, fastest chain.
Yeah,
I think Solana does a good job of like knowing what it's good at and focusing on that.
I've seen this as well. I mean, well, I think that, you know, some of these L2s on Ethereum, like whether or not they end up driving a tremendous amount of value to ETH, I'm not sure. But I think something like Base has a lot of potential, right? Like, and it can be virtually costless.
Solana's like even more censorship resistant than Base though, because Base is a single sequencer. Like Solana is like cheaper and faster, and it's like not a single sequencer chain, and it's more like reliable. So they're clearly competing, and this is just like technology stuff. Like it's like who's better, like AWS or like Azure or something like that.
Yeah. I think we have similar views on just the trajectory of this, right? Like I think, and especially when it comes to tech and finance, it's not about really this like censorship resistance anymore, right? Because like it's sort of a bizarre idea of censorship resistance with like USDC, you know? You don't like it, Circle can always just like
they're trying to just be like open APIs. Even like you can't like program really easily on bank rails. It's just like so annoying to do that. It's just like fintech. So I think like the rest of crypto is like fintech innovation, but Bitcoin's more a revolution.
Yeah, I agree with that.
Yeah.
That's probably a good spot to end.